This is our Forex blog for May 9th, 2011. And like most days, we really want to find some of the stronger currencies and buy those against the weaker ones. Today, the dollar was strong for most of the day, and after about 6:30, the euro was weak. Pound off and on, very choppy day in the pound. So a little bit of strength, or mild strength and a lot of weakness, mild strength, a lot of weakness. If you see that, basically look for the peaks. If the pound on down moves is going down more than the peaks on the way up, look for when the strength disappears, some weakness. When the strength disappears, some weakness, and eventually this stayed weak for 3 hours, and there would have been a really good move against the dollar and the yen. The dollar's daily, weekly trend is up. The monthly trend slightly down. This one, the daily trend was down because of all the weakness up until about 8. The weekly and monthly trend's up. So I always prefer when the weekly and monthly trend's up to buy that currency when I see real-time strength. So let's just look at some of the trades. The dollar was strong most of the time. The little bit of strength in the euro disappeared around 4:30. It would have been, a good approach to look for shorts after that point. And sometimes it takes a while before the real move happens. Here's 4:30 in this case, and the price is above the hourly, which means it's more likely to go up than down. And that's really one of the reasons why it really never fell through the floor right there. 8:30 came and it broke the hourly, and it just collapsed, fell 75-80 pips. Extreme weakness here. Usually whenever you see that, our trend explosion system looks for a pullback. You look to get back into the trend, and you can see it fell another 50 pips. Let's look at this with our new tipping point and momentum pro, which basically use very similar technology that we've used for 5 years. It's just designed to show you on a bar by bar basis how strong or weak currencies are. And the benefits of this is improved timing. So when this broke down underneath hourly right here, one thing you notice is this is a broad-based move. Force of the market is mass times velocity. The tipping point is the mass, basically the percentages of currencies going up or down. Tremendously weak. Euros falling bar after bar after bar. Dollars getting stronger. This is the velocity of the market, how fast it's moving, how far it's moved compared to the past. And in this bar, almost 3 times more weakness than normal. So when you have a broad-based move down with incredible velocity, usually those trends continue, and you pretty much knew it, right at the beginning of this trade. You got in, it started falling about 25-40 pips. Most of these bars are all red. There's no green. The momentum is to the downside, and when it hits the lower containment band, you certainly might want to get out of some or half or even all of your trade. You had a pullback right here, and notice, on some of these bars, decent mass and velocity. And as it goes sideways here for the last 15 minutes, notice there's no, euro dollar pairs aren't going up and dollar pairs aren't going down. The momentum to the upside is slower, and even as it goes sideways right here, even though the euro dollar didn't start to fall until right here, for these previous 2 bars, or for this previous bar actually, other euro dollar pairs had fallen. Anytime you see one currency go sideways and you know the direction of other currencies by using these tools, you go short, and initially very broad-based move with a lot of momentum, and it's kind of running out of steam down there. If you wanted to get out of half your trade with 25-30 pips here and tighten your stop above there, that's certainly a good idea. I always recommend drawing your fibs on the first wave, and usually the fib target, in this case to the pip, nailed the low. So if you got short somewhere around 21, out here at 94 with about 25 pips on the first half, and then you made another, it looks like 25 or so on the second half. Now when currencies are underneath the lower containment band, it can be risky selling it, because most of the time when the market goes outside of an extreme range, the market reverses. So if you're looking for reverses at the lows, here it came down, and notice as it gets down here to the bottom, it becomes less of a broad-based move down. The volatility to the downside lessens. You're usually better off waiting for a little double bottom, or in this case a 1, 2, 3 low. This is where it makes a low, rallies up, pulls back about half of the distance, no more than 62%. And notice on the way down, broad-based move down with a lot of volatility. It gets less and less and less. The volatility gets less. This second, bottom right here is a pretty high probability trade, and you don't know it's going to make you money or not. However, once you got into that trade and you saw it was a broad-based move up with over 3 times more volatility. In fact, this is the most strongest move of the day, except for this move right here. And this move right here is towards the end of that wave up. If you see an explosive bar reading at the beginning of the move, it tends to continue. So you're in that trade. The next bar has a very high participation. Most euro dollar pairs are going up, dollar pairs are going down. Volatility is kind of slowing down a little bit. You're going against this strong trend, and there's major resistance right here at the weekly and monthly pivots here at 17. If it gets to that level, you've made about 40 pips. And when it goes sideways right here, you might just want to move your stop up underneath these bars low. Comes up here, can't break it, and you get stopped out around 43.04 for a nice little 25 plus pip profit. And notice as it's going sideways right here, this bar is going up, but other currencies are going down with a lot of momentum right there. And just like you saw right here, when that happens, usually there's a move to the downside. Let's look at the euro against the yen. The yen also got really strong around 8. Let's just bring up the euro yen chart. And when this thing's above the hourly, it's more likely to go up. When it was kind of hovering around here, chopping around, broke above it, came back down, broke back above it again, you might have went long right here. Notice a decent broad-based move on the way up that all of a sudden right up here near the highs kind of falls off a cliff. The upwards volatility is over, and then you have a lot of weakness coming into the downside. That moves over. If you had bought this little sideways breakout right here, initially there's some broad-based moves up, less than average volatility, and as it goes sideways there's no more continuation, so you get stopped out with a small loss. Anytime a currency makes a higher high and it just can't seem to get back to the high or even break it, eventually when it breaks down, because it's been a sideways rectangle pattern for a couple hours, very high probability short right here, it's likely to break the hourly, and once it does, it's a decent confirmation that it's likely to go down. So you short this around 116.10, and right away, the reason I like this tool more than any of the other ones is because it's an immediate tool. A lot of times the market's choppy and you're going to have some moves up, moves down, moves up, moves down. That's normal. But when the markets break out of narrow trading ranges, this just becomes an incredibly useful tool. And almost all the way down you have a broad-based move down where euro dollar pairs are making lower lows on almost every bar, and the momentum of the move down is just incredible. In fact, if you look at the whole day's charts, with the exception of right here with some weakness, which if you saw that, you might have gotten into a trade here and lost 10 pips. Most of the time you see a big spike, where both the tipping point and momentum are over our dotted extreme levels. You could even go short right here, draw your fibs on it, and most of the time this trade's going to work, and it's going to work its way down to the fib target. So you risk 10 pips here, even getting into this trade late, short around 80. 55 is your profit target. That's 25 pip profit while risking 10 pips or so. And if you had got into the trade a little earlier, right here, you're short around 10. Profit target's down here, and it kind of runs out of steam down there. You might want to get out. Now notice on the way up right here, you have a little wedge pattern, very high momentum on this bar. Then the next bar, doesn't follow through. The next bar doesn't follow through, and so forth. The upwards momentum is over. You had about 10 minutes of waiting for this to drop, and once it does, again, high momentum, high velocity to the downside. There is a lot of support down here, but so you might have only got out of this trade with about 15 to 25 pips. But regardless, it's a very high probability trade. And just like before, on the way down here, there's a lot of weakness here, not so much here. So if you wanted to try to buy the lows for a quick little 10 or 20 pip scalp, notice a lot of the euro dollar pairs are going up, yen pairs are going down, however with almost no momentum. So when you see that, going sideways with less than average momentum, you get out of your trade with a small profit. And like I said with the euro dollar too, anytime you get a double bottom or a 1, 2, 3 low, this is closer to a double bottom than before. It initially falls with a lot of momentum and force. The tipping point slows down a little bit. The momentum is less than an extreme level, and it's not as good as the Eurodollar. Eurodollar is a no-brainer trade. This one didn't look quite as good, but if you did take that trade, once you're in that on that breakaway bar here, almost every Eurodollar pair is going up, yen pair is falling, and it's doing so with 3 times or more volatility, which usually continues. The next bar has a very high percentage going up, but with very low volatility. So you're only up 10-15 pips right here. You might want to get out of half your trade and keep moving your stop up. But the point is, it's a very high winning percentage trade when once you're in the trade, you see all the currencies going your way. Usually that trade's going to work out. The Swiss, also very strong later in the day, and you could have sold the weak euro against a strong Swiss. Let's take a look at that one. Notice also this one was just hovering right here near the hourly. It broke down underneath the hourly, so let's say you went short right here. Decent percentage of euro-dollar pairs falling and Swiss pairs getting stronger. The volatility for this time is at or above average, which means the trade's likely to work. And as it starts to go down, you have extreme, broad-based move down. Pretty much probably 70% of euro pairs are falling, and Swiss pairs are going stronger. And force equals mass times velocity. This is a mass. Most of the pairs are going your way, and this is a velocity. And as it got down here and went sideways, and you see, these readings kind of slowing up, you might decide to get out of your trade there, but you made about 40 or 50 pips, and there was no bounce whatsoever. So when this thing finally broke through the lows right here, after going sideways for at least 30 minutes, that's the minimum I'll personally take most times. You go short again, and initially there's not that much mass behind this. Velocity is pretty decent. You keep your stop here. It goes sideways. You never get stopped out, and normally you want to draw your fibs on the move and get out at the fib target, which is right down here. Now when it goes sideways real close to the fib target, I personally would get out somewhere in this range right here and not hold on for that extra 10 pips. But that's another 40 pip move, because the currency meter is showing you that the euro is weak and the Swiss is strong, and the real-time tools on a bar-by-bar basis, they work on 1 minute charts, 2, 3, 5, anything that's intraday. 4-hour bars, 30-minute bars, 60-minute bars. And a lot of people are using them to, on 30-minute bars or 15-minute bars to spot what to trade during the next 15 or 30 minutes. Because usually trends that make a spike up, will continue after a tiny pullback or sideways range. Those are some of the ways that you can use this. When the pound became weak after 8:30, you could sell the weak pound against the dollar and the yen. Here's the pound dollar after 8:30. You can see it's weak here. You get a little bit of a move up, and then it breaks down again. Decent initial broad-based move down without that much volatility, and so you might have got out of this trade with 20 pip profit. It went sideways again, you shorted it again, and this time it's a broad-based move down, and after the market's down here near the lows, there's no more weakness, and guess what? That's the end of the move. And like I always say in class, most of the time when the market's underneath the lower containment band, you get a counter trend trade up. This is also at a Fibonacci profit target level that I drew last night. I spend 30 or 40 minutes every night, so you don't have to. The weakness disappeared. This is a very likely support area. It's way underneath the lower band. If you bought right here, guess what? The first bar, it's likely to work. It explodes up, mass and velocity. Now you have, very strong mass of the market. Almost all the pound pairs are going up. They're not going up with a whole lot of momentum on subsequent bars. So when it kind of goes sideways right here, you might get out of that trade at around 18. But regardless, you're in here around 80, 85. That was a pretty easy, low risk 30 pip move where you're risking less than 10 pips. With a good chance of making 20 or 30, and you can see it exploded up, a lot of momentum as it went sideways right here. Pretty decent percentage of pound pairs going down, dollar pairs getting stronger, but with almost no momentum. So this is a decent little pullback trade right here as well. If you're scalping using a tick chart, you get into that trade right here, and again, the mass and velocity come back in the market and it shoots up 20 pips. You could also use a tick chart. Here's the pound dollar tick chart at that time for that last pullback. Notice the beautiful entry on here. You're risking only 6-7 pips. You got a pullback here. The other tools were not showing that much weakness. You go long, and it just kind of worked its way straight up, almost 30 pips. With very minimal risk, 5-6 pips. Usually trades that go in the direction of the current momentum will go at least 10 or 15 pips most of the time. So the win-loss ratio is good on this trade, and in this case it moved a lot more than you would have even expected.